Fuck. Let me know if you can hear me, guys. Fucking hell. I've been sat here speaking to myself like a dickhead. Let me know if you can hear now. Oh, oh no. Oh no. That's bad. Yeah, morning Lewis, morning Sierra, morning James. Hope we're all well. I did wish you good morning quite a while ago. But yeah. I made some really good points there as well. That's a shame. Well, guess we will start over. Luckily, there's no action. Okay. Luckily, there's no action happening on the charts right now. No immediate need to take a trade. First of all, I was bragging a little bit about how clean this is of a trade. We got in this wick and we got out in this wick. So sniper entry, sniper exit, all within about 9 hours. 9 bars. There we go. 9 hours, 2.3%. That was nice. End-to-end trade. Lovely. Then I was saying about EU and GU again are acting so different right now. So if we look at this Asian session, okay, obviously the idea that we usually go off is look for a consolidating Asian session, and then when that happens, you can sweep the low, take out the high. That is playing out right now on the euro, and then the pound has just wiped the floor with it, used it as a resistance and bounced off. So like, these are just acting completely differently. If we plot them one against the other, like you can see the divergence between them. Right now you can see the pound is falling, the euro is rising, which is just, oh, what the fuck is going on here? I'll get rid of that shit. But yeah, that is a sign of divergence between the two, and Will put a really good message in the group a couple of weeks back, I think it was, about when this happens on two currencies that should be correlated. He uses it as a sign to just not trade them. It's an early sign that they're going to be less reliable price action wise, and he was completely right. Over the past 3 weeks or so, this week we've had a really good week, but we haven't really been trading as much, but we've still made between 3 and 5%, somewhere 4 and 5% I think it is. But yeah, the past 2 weeks preceding that were absolutely terrible price action wise. So because of that, I've even been thinking about trading EURUSD intraday, see how we fare with this, because it's still a dollar pair, highly liquid pair, similar to the euro. You can pretty much get like raw spread on this straight down the pipe, with only minimal spread, like 0-1 tick spreads. So that is why I like EURUSD, and we've seen that we're having reliable price action with it, so we can trust it at the moment. But yeah, euro and the pound are just behaving completely opposite right now, which is strange. But regardless of that, we don't really have anything that we can trade right now. Here we've used the EMA now twice as support, but we don't really have higher high, high low structure until this high is broke. So you'd want it to be like that. So this might follow a buy later in the session from this area, but right now nothing. What I was mentioning about the Asian session then is people define the Asian session quite differently. It's actually the Tokyo session and the Sydney session, which is two different sessions. But what I do is I plot the overlap between them. So right now that's midnight and 5 AM UK time, and that's the overlap of Tokyo and Sydney. And this is what I call my Asian session. And you can see it gets defined pretty well within that overlap. Within the overlap, you can see the high between the range and the low between the range. And then either side of this, I wouldn't really class as a session. Just like how, you know, later in the London session, it kind of is just the New York session. And then later in the day in the New York session, it's kind of everything dies out after like 6 PM anyway. So yeah, this is my Asian session that I define and mark up. But yeah, we'll go ahead and mark up the day. There's no immediate trades to follow right now, as I mentioned. But let's just have that analysis plotted out for us to see. So I like doing this on the 5 minute, marking up the day. So I'll mark up the Asian range with my little box. That allows me to take the indicator off, keep it a bit cleaner, and then we just want to mark out our session ranges so that we can see where the liquidity is lying from each country's session within the day. So there you can see on the pound, the Asian session range got swept, came up and used this low as a new high as resistance and came back down. Same again here on the pound. We have resistance, but we're waiting for this low to break. If so, then we can wait to see where this EMA is going to come and be another point of resistance, and then catch a trade from within this point there. So that's the idea of the day that we just need to wait for. It's not about looking for that and trying to force that to happen. It's just being aware that like that's the scenario that we need to happen in order for us to take a trade. And if it doesn't, then we're just going to be sat here not trading at all and avoiding any losses. One of the worst habits that new traders have, and everyone does this, okay, is you load up the charts as a beginner trader and you look for a trade. And you it's sort of like cloud gazing, where you look at it hard enough and you actually start to see that it's there. And it's a terrible habit. You know, if you spend long enough in front of these fucking candlesticks each day, I'm sure you'll start to convince yourself that there's something there. But that's just not how professional trading works. Professional trading is about waiting for the trade to happen and knowing what it needs to trade, rather than just thinking, oh yeah, I could trade it. If I just enter now and then put my stop loss here and my TP there, then this would work. No, that's not how trading works. So just avoid that. If we carry on with the analysis, we can see that yesterday's low got swept just now. That's where price is at here. That's been swept. Just like that. Below this, we've got this point of liquidity here. Below that, we've got a London low. And then I don't really see price making this big of a move in London, but you know, let's see where the next levels are. So we've got liquidity there, got liquidity there. I very much doubt it, but we'll plot it just for the sake. We've got liquidity there. Move these along. For the high scenario, got one here, slightly above. Got one here on London, and then we've got this one here. Asian. So that's where the money is. Okay, what we've just done there is basically plot where the money is. Okay, so imagine this low here. Okay, some people will have buy limits waiting at this level. Maybe something a bit more conservative like this, where they're just expecting that if price bounces from that low, comes back up to that previous high, they could make a nice 2.3%. Okay, so that's their scenario. Another one is people that are going to try trade price if it just completely melts off for the day, and they'll set a sell stop. And what a sell stop is, let me move that along. What a sell stop is basically where instead of price coming from below up to your entry and back down, you're actually selling through price. So you're selling through price, okay? So if price comes down here, then we get tagged in for a sell and keep going, okay? So that's what a sell stop is. By the way, I'm not ignoring the fact that we've got EMA, EMA, EMA. This isn't a low. Okay, I don't trade that because it's not a lower low. If that broke that low and then came up, yeah, I'd be interested. But that ain't wave structure. Okay, so I don't care about that. Probably similar on EU at the moment. No, it's not. EU's not even doing it. EU's just straight came up to break that high. Now on EU, now that it has broke that high, we do now have this high, low, high, low, high. So we will wait for this low to come back down. And now we do have multiple EMA supports. So this is actually lining up for longs on the euro. Okay, so let's keep a little eye on that. Set an alert somewhere there. But yeah, anyway, as I was saying, a sell stop is where if price came down through your level, you'd get tagged in and then keep selling onwards like that. So that's the difference between a stop order and a limit order. Okay, so wherever you have a level of structure in the market, you will have a collection of these type of orders laying at that level, you know, because where else are you going to have them? Okay, where else are you going to have them? You know, people aren't just placing them in like random points halfway through the fucking wave. Okay, they're all at the highs and the lows, especially when it's like the low of the day, the high of the day, so a session range. All session ranges are points of liquidity, but not all points of liquidity are session ranges. Okay, so a session range is more, there's more money lying in there than there is there, because that's the actual day's low. Whereas here, that didn't occur, well, it occurred in like the Frankfurt session, but not quite the London session, okay? So both are valid, that's why I have both on there. But, okay, the market makers know that people have orders like this laying on liquidity levels, okay? So what they do is they will print a move, which basically, this is your sell stop. Let's mark it up, okay? So that's a sell stop, and that is a buy limit, okay? The move which the market maker is likely to manipulate is the one that causes the most amount of damage. Yeah. So what happens is price prints through the low, takes out this stop loss, and then comes back up, takes out this stop loss, and then both of these guys get fucked. Okay. So that's how market manipulation works. Whenever you see a low, just like we did here, yeah, this liquidity level, look what happened there. Yeah, liquidity sweep. Look at this. Yeah, that's what happened. This was a sell stop, and this was the buy limit. People had stop orders there, and people had buy limits there, like that. The market printed through, stopped this one out, and then reversed and stopped that one out. And what that allowed to happen was money got pumped into the market, and it converted buy orders into sell orders, which basically means orders can get filled. Every buy order, in order to be placed, needs somebody to sell them that order, okay? And if you want to place a sell order, you need someone who's got a buy order to buy it from you, and vice versa, okay? It's a zero-sum game. So the reason this happens is not just because they're greedy and they want to make loads more money from us, it's also so that price can get filled. If that didn't happen, you wouldn't be able to buy and sell price as efficiently as we can. It'd be more like a crypto market where there's no sellers right now, so you can't buy, or you can't sell because no one else wants to buy it. That's why Forex is so much more liquid than crypto. Not only because there's so much money in it, but because of how the efficient order flow takes place by the market makers. Right, we've just been pinged on the euro now. So let's check it. We're looking for a long. Asian high has just been swept after the low got taken. So there we had our Asian sweep. Nice. The high has now just been taken. session ranges. Up here. Maybe this one. And this one. Yeah, we'll have those. That's pretty much everything that's near close right now. So now you can see where liquidity got swept from the Asian low. It's met that target at the top. What we're left with here is higher high, higher low structure. We've got multiple EMA supports, so we're going to look for price to come back down, use this as support in line with a fib level and push higher. Of course, we want to see some candlestick rejections beforehand. Let me move that along. And then if we do get all of our confluences, then we'll be taking a trade. There we are. I've started not taking TP2 at our original level. I've started with how choppy the EU and the GU is at the moment. I've started just taking them to our previous high level like that, making 2.3% each time. Nice quick in and out, secure it 100% of the position. I've been liking it a lot more recently doing it this way. So that's what we're looking at on EU. As GU broke the low? No, GU did not break the low. So we don't care about it. We're gonna forget about it. But EU's the move. If that wants to continue higher. Apologies, went to go grab a iced coffee. Right, so we've got the euro. Wait and see what happens on it. I'm just marking it up position size wise right now. She's falling, she's coming back down to level. I'm gonna wait for some rejection now, don't we, of course. Well, that's nice to see. Obviously we want to wait for that to close, but if so, we could be looking at a limit. Let's load up the chat, get ready to see if this does close that way. Got a couple minutes yet anyway. This is the first minute candle of the 2 minute range. But I'd get marking it up, but it's a 4.6 pip lot, 4.6 pip stop. Add your spreads onto that. What I've actually been doing, out of my trust issues for brokers recently, is I've just been adding a couple ticks on either side of everything that I place. Okay, so let's say with this, our entry should be 8.510, and let's say they quote a 0 tick spread on EU, for example. I don't fucking trust that anymore, yeah, so I'm putting 2 ticks on it anyway. We'll refer to them as trust issue spread, the additional trust issue spread. Okay, the amount of times you get fucking stopped out when it doesn't even hit your stop and you've accounted for spreads is ridiculous, especially on prop firms. Right, okay, that is a confirmation candle for us, so we're gonna take that. Yeah, so we're setting our limits. Let me put this one out for the group. Type it out from. She's moving. Right, I'm put my limits on. I had them preloaded. Bosh, bosh. There we go. Right, I've got my limits on. Alright, let's share the levels out then. Stop loss, take profit, entry, stop loss, take profit. Hold up, something ain't right. them mixed up. That's TP. That's your stop loss. That's your entry. Cool. And this is 2.33. Might even put a little TP one there. Right, there we go. Spread that one about. On the 2-minute time frame, let's see if we get tagged in. Pound's reacting how we want it to. Well, kind of not actually. I'm saying that because these are moving in complete opposite directions today. We do have a divergence on the euro pound. Usually you would want to see them going the same way, but at the moment they are on the opposite side of the EMA that we want them to be. But yeah, this one's valid, lads and ladies, if we've got any ladies in here. That's what we're looking for. Not been tapped in just yet. Right, we're tagged in. That's our entry. See what happens. It's valid. We know we've got about a 40% win rate, so 4 out of 10 times it 4 out of 10 times it wins, 6 out of 10 times it loses. If you add up the amount we make when we win and take off the amount we lose when we lose, we know we have an edge. That's what trading is. It's not about this being right or wrong. It's about playing the probability similar to a casino, if you owned a casino. That is. That's how I look at trading anyway. It's a really helpful mindset. That's a nice close, bringing us back above that EMA, which is what we want to see. Shows that it's been used as support. Who's in this one then? Let me know. It's valid, so you just set and forget. It's not really healthy to sit and just watch the chart while it plays out. At this point, as a beginner taking a trade, what you'd want to do is just set a limit at your stop loss. Set a limit at a point that you'd set your stop loss to break even. Go away and then wait for those alerts to go off. Obviously, I'm on a fucking live, so I'm doing this for the content and educational aspect. That's the only reason why I'm actually sat here with the chart open. If I wasn't on live and if I wasn't teaching people how to trade like me, I wouldn't have this chart open. But obviously it's for the purpose of the live, so that's my advice. We've got a nice reaction from our entry so far. Could have been a little bit better. I'm taking it from the 78.6, but I'm pretty comfortable with the 71, and I know we have an edge there anyway. We're currently running in about 0.9% profit at the moment. We've used that EMA in those fib levels and our zone as confluence together, and we've managed to find support from that. We had a confirmation candlestick before in the form of this bullish hammer, which is why we then looked to take a trade from that spot. But it's going pretty well so far. Don't want to speak too soon because obviously this is trading, anything can happen. So let's just sit on our hands and wait until price goes our way or not. Currently just shy of 1% up. This candle's been nice. Still got another. Oh, there you go. It closes. That is a nice candlestick for us. Set an alert at our next point of interest, which is here. That's where we'll go stop loss to break even. How are we looking, CM? Making money? Best week of trading in my entire life, no joke. Yes, that is what we love to hear, mate. Glad to help. It's been a fantastic week for us. The markets have been very slow the past couple of weeks before that. We've just been pretty flat. Couple bad rough weeks in the market. Nothing crazy. We've not lost, not blown any counts, not breached any drawdown limits or anything. It's just been slow and reckless on the price action, but this week we have absolutely smashed it. So it's just important to just trust the process and just let it play out. Not every week's going to be predictable. We're coming up to our first point of interest here, where we'll take 50% profits and set our stop loss to break even once that alert goes off. So keep an eye on that one. When it gets close to it, I'll do my manual close at that point. And then set the stops to break even. Left behind a lot of inefficiency there. That's been a pretty quick move up in the market, so we might see a retracement. It's not off the cards at all. Right, yeah, we're at that point. So let's close half the position and set the rest at stop loss to break even. Oh, never mind, didn't even have chances. Hit full TP. Nice. Lovely. So I didn't manage to close half because price shot up straight away, and I've hit full TP there on my position. Obviously, I mentioned to you I had a couple ticks of trust issue spreads because I don't trust the brokers' quotes. So mine's fully stopped out there. Yeah, there you go. Bosh. Okay, that's nice. 2.3% profit that we've just made, and we did that in the space of 10 minutes. So that is fucking lovely. Okay, let's share that one out in the group. If you didn't catch that and you didn't see why we took the trade, just rewind like 10 minutes, 11 minutes, and you'll see why we took the trade, the points of entry that all added as confluence together, why we got in the trade, why we chose the levels we chose, why we were looking, and there you go. But yeah, that's a nice extra 2.3% for us this week. I think we're up about 7-8% this week now after this. So that's lovely. Let me share that with the VIP group. See everyone else that made money with us. And it's flying, still going. That's plus 2.3. Gosh. Awesome trade. Lovely stuff. Alright, so that's the first trade of the day. I'm waiting to see which one of these out of the pound and the euro is going to break first, because they are acting completely divergent to one another. The pound has swept this session range low and might start to come up again and be a bit more coherent with the euro. The euro's next liquidity is all the way up here. Okay, so it's not what I like to see, because it might look to break wave structure, take out some stops there to gather the juice to push it that little bit further. So that's not the best sign for me. I like to see closer levels for the price to take out. Okay, but it would be valid. Yeah, we're still acting as support here, so same again. If this forms a high, then we look to take that on as a trade and double up. So let's see what kind of reactions we get once price comes closer to our level. So we're up 2.3% for the day. Yeah, this week has been fantastic. I'm looking at my weekly tab now, mate. GU on the 11th, EU on the 11th. We took a small loss, GU on the 11th as well, 0.5% loss. And then we've just won EURUSD yesterday, and now we've got this Euro winner today. So yeah, 1, 2, 4 winners this week and only 1 loss, and we're making like 2-3% on each win. So that is fantastic. And then the loss, we actually managed to close at 0.5% as well instead of a 1% loss, just to stack it up even more. So yeah, fantastic week so far. If I didn't trust the process as much as I do, I'd probably close out here and be like, right guys, we're done for the week. But this is again providing another valid setup to keep going. So we're gonna wait to see if we can get a trade off this as well. This is not being greedy. This is letting the strategy play out. Okay. I see a lot of people doing techniques where they're having a bad week, so they'll just stop trading and not trade for a bit, or they're having a rough patch, so they'll stop trading, or they've had a few wins and now they want to stop trading and stuff like that. Which, yeah, if you're struggling with your trading psychology, I do agree with that. Whatever helps you. But for me, my trading psychology is, as David Goggins would say, is fucking callous. I'm completely emotionless when it comes to trading now. So none of that shit gets to me. If I'm having a bad trading week, like you've seen for the past 3 weeks, lads, I've had a pretty rough patch in the markets for the past 3 weeks. I think it's only like -5%, so it's not crazy. I've not blown any funded accounts or anything like that, but it's not been good. And I've seen a lot of beginners in the group actually flapping at that, and like a couple new people leaving, people just losing their heads because they've not had a winning week for like 4 weeks in a row and shit like that. If you watch my Sniper Sundays, I'm completely transparent about it. Show you all my wins and my losses, because I know that they all add up to wins when you just zoom out a bit. But for me, this whole I'm going to not trade for a bit and wait for the markets to get better, it's completely wrong. You're not removing your exposure to risk. You're also removing your exposure to reward. If your edge is profitable, then let it play out. If you're sat and remove yourself from the charts, your portfolio is not going to win. Yeah, you need risk in your portfolio in order to be exposed to reward as well. So if you let your losses scare you, they're going to scare you away from the wins. Okay? Don't run away from risk. Accept it and run with it. That is how you make money in trading. If you just accept your win rate every time you take a trade and say, okay, I know this has this % chance of losing, it becomes a lot more comfortable when it hits that stop loss. You stop caring. And as long as you're not putting 10% of your whole account on every single trade, you're going to be absolutely fine. As long as you've got that calloused mind. And that really comes from experience. There's no book that you can really read to gain market experience. You know, pilots don't learn to fly from a textbook. They have to get in that fucking flight simulator and do them practice runs and actually learn it by hand and put in them man hours to learn it. Just like the phrase calloused mind is actually really good from David Goggins. Because when you go to the gym and you lift the weights and you're constantly rubbing your hands on that iron, you get calluses from the experience of your hands touching that rough metal. And that is exactly how your mind calluses as well. It has to be done through the hard work of actually doing it. So understand the theory, but then just apply it over time. Trust it, do it properly, and you'll get that emotionless mindset when it comes to trading that is necessary. But yeah, that's a nice trade to start us off with a day. This GU that we were looking at, so you can see we've got multiple resistances from the EMA, but we've not broken this low. Okay, so if it looked like this, then I would be looking at these as trades. But this is not following the ideal wave structure that we want, where we need to see higher high, higher low, like that, with our EMA coming in and our fib levels being respected. Yeah, that's our schematic. This isn't it, because this is above this, so that's not a trade. This, however, is. We have got exactly what I just drew there, if you had it that way, but obviously we're going long. So this is what we're looking at. We just need to wait to see some candlestick rejections here. As I mentioned, as if this was making profit, we've left behind some decent fair value gaps in this. So price will want to come and recover that if possible, to gather some juice and not leave inefficient order flow behind. So we are just waiting on some more rejections as price comes into our level, and then we'll be looking for another trade higher. Set these up, not limit, waiting for confirmations first. Okay, let's set some alerts here. See how price is getting on the day time frames. Let's move this on a bit. I've still got my limit on this, don't worry, I'm going to pop it back on. Got a BPR there, got an order block here. That's still valid. I think it's about there, right? Yeah, still waiting on that. I need to start tightening up my arrows because my trades fucking bounce, don't they? Like they're straight end to end, like wick to wick. Like this was 9 hour trade, but I'm always drawing my arrows like wide as fuck, as if it's gonna be some fucking gradual move. But yeah, these ones fucking move, don't they? But yeah, that's what we're looking at on the euro. Let's see what else we're looking at here. So this was our bearish trend. I'd call that more of a 1 hour trend. It's a lot more clear on the 1 hour than it is on the 4 hour. So I'll call that a 1 hour trend. This 1 hour trend broke, gave us substructure on the 15 minute. That broke, reversed. We took a beautiful trade. We got in on the 15 minute wick, closed higher. We got out within those 15 minute wicks, and then price is still trading within that that level. What we're looking at now is we're going to see, okay, oh right, never mind, get back to that later. Never mind, it's just telling us that this is broke higher, so let's remove these and just let it keep running up. Anyway, back to the back to the dollar Swiss. So after this substructure broke out, we formed these highs. It was originally these highs. I believe this was our CPI within this whole little debacle there, where it just shot up end to end with volatility. So I did just kind of ignore that, yeah, and treat it as if it was just a normal wave like this. Now we've double topped, so we've not actually broke higher. So basically what I'm saying here is this is our next point of structure, as opposed to this, where you could say, okay, that is your structure, and then this broke it. Because it was volatility throughout the CPI, I'm ignoring that, and I'm treating this as our structural high. Okay, so this is our structure. What I want to see is price break higher, close above this, giving us a higher high, and then I will actually look to trade another long one more time from that low that forms there, using our schematic, otherwise known as the John Wick strategy. Why is it called John Wick, you ask? Take a look at your fucking screen and see. The shit goes wick to wick. But yeah, that's what we're waiting on. Mark that up. Check out the euro. Yeah, euro we're waiting on as well. This one's waiting for an entry. The pound on the day trading. There's our supports from these trend lines. This gives us like a lower bound to trade into. Basically what that means is all of this white canvas space, I'm happy to trade. So for example, like if I get a short here, I'll trade it within this white space, but I'm not going to look for it if we like get all the way down here, and I'm expecting it to break through that. So I'm telling myself, where is my trading range? Okay, because you need to know, like, yeah, this might be a sell, but have I got enough room on the downside without anything that could interfere with it along the way? So that's why I use trend lines there. We are very, 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 very overbought on the pound. We've got all this daily imbalance that could do with being recovered. We've got all these buy orders down here where people would have gone long. Where are they taking their profits? Okay, so price doesn't just fall by people opening sells. It also forms by people closing their longs in profit. That's what maintains order flow. So there's going to come a point where people decide, I've made good money from long in the pound. I think I'll close out now. And we're looking at that weakness at the moment. We had this, if you want to call it a trend, very sharp, impulsive price action on the pound, which broke beneath, okay, which showed some weakness, but we never had our change of character. It needed this low to break and close beneath in order for that to then be considered bearish. That never happened, and price kept pushing higher, so we didn't trade that. Instead, we actually broke the highs again to the upside, and it's only now that we're seeing that break and maybe retest and sell off. So this is our 1 hour trend. We hop on the 15-minute. This is our substructure. What we want to see is this substructure break beneath. Once that happens, we'll look for our fib levels. We'll look for areas of inefficiency, such as order blocks. And then if we do get that low print, we'll look to take a level that aligns as confluence between our fib levels and our areas of inefficiency, and look to trade that lower. Usually with these setups, I aim a bit more higher on the RR front, so that would normally be a 4.3. Depending on where the inefficiency is, sometimes it could even be, you know, from up here, it'd be like a 6R trade. However, as I've mentioned, the markets have been a little bit rough at the moment, a little bit choppy. So I've only been aiming for my usual TP1 and taking full TP there. But I'm liking the look of this on the pound. It's similar to what we are looking at overall on the euro. This weakness finally breaking, changing character, moving down. So I think we can mark that as orange now as well. So we're just going to say wait for break of substructure, wait for retracement after. Check intraday. Okay, so euro's flying higher. The pound is still messing around. So yeah, we'll see if this does come up and take these ranges up here. Still obeying wave structure, which is good. Very, very bullish on this. Wait and see there. Can take that off for now. See, that's one that we're waiting on there, waiting on that there. Set an alert when that closes below. There's a little handy tip for you actually, if you didn't know that. So you can obviously set alerts at price levels when price reaches that certain level, and then you can do what I've just done there. If you plot a line and then set an alert, you can change the trigger. So this only once is where price reaches that alert, then you'll get alerted that price has reached it. If you do once per bar close, what that'll do is it'll alert you after. In my example on the 15-minute, it'll alert you after a 15-minute candle closes beneath the low. So what that is useful for is if price just wicks it, like it has done these previous few times, that alert won't get set off, because I'm waiting for a close beneath that bar. So if you didn't know that, that's a nice little trading view tip for you. for bar close alerts. Let's see how price is moving down under. So this is what we're waiting on with both of these, is this move. We had this ABC correction that broke out. We've used that previous resistance as support, and basically what we're waiting on is we need that substructural level to break, come back down and fill in imbalance, and then push higher. So no further updates on that. Still waiting on that schematic to play out for this one. I'm not certain on that actually happening, because we've got the opposite thing happening on the euro and the pound, where we've had a nice run up and we want to see weakness. However, these are looking very, very different to the euro and the pound right now. On the euro and the pound, we saw this same move up, where it was a blistering strong move higher, but both New Zealand and Aussie corrected off very nicely. You got a textbook ABC correction followed by a break and retest. But when we're looking at the pound and the euro, price is still so high. Yeah, so this is that same blistering run that we mentioned, and we're still at the highs of it. We haven't corrected at all, unlike what happened here. So again, huge divergence between these pairs that are supposed to be 70-80% correlated. So I don't really take it as confluence when I'm looking to short the euro, but preparing to maybe long something like New Zealand or Aussie dollar. But it's not actually a bad scenario to happen. I do it quite a lot, where I'm taking a long on one and a short on the other, where they're supposed to be highly correlated, and it provides you with a very nice hedge. So if this happens and we're looking to make like 3% there, and then this happens where we're looking to make like 2-3% there, one of them's going to win, the other's going to lose. But obviously you take one from 2.7 or you take one from 2.34 and you've got a positive sum. So it can actually provide a really nice hedge in the markets for you. So I'm completely not opposed to going long and short on two currencies that are supposed to be correlated. We've actually seen it before where one of them hits their TP, comes back and hits the TP on the other one as well. But that's usually when they're on different time frames. Which I guess these are. This one is a 15-minute trade, whereas this one's more on the 1 hour, 4 hour. This one's on the 15-minute, 1 hour. But yeah, apart from that, we're running out of shit to say. We're just waiting on this to print more waves for us. So I think I'll stick my mic on mute. I've covered everything that I can cover in terms of what I'm looking at. Yeah. Waiting on structure to break on Swiss, Aussie and New Zealand. And then Euro and the pound, we're waiting for limits. Sorry, waiting on limits on the Euro. And the pound, yeah, we're waiting for structure to break, I guess, on all these three, and then Euro's on its limits. So we'll just leave that like that, and then just wait to see if this comes back down and gives us another wave to trade. So I'll be back with an update when that happens. Mitch says 7 minutes this trade took from setting it to hitting the TP. Is that a record? I don't know if it is. I'm pretty sure we've had some 5-minute trades. But this one is up there. 9 minutes I got on that. But he's obviously took 1 minute either side from when it was actually entered before that candle closed. So yeah, that was I've got it down as a 9-minute trade, making 2.3%. But I don't know. We'll have to add it. We'll have to add it to the trophy cabinet. That one, 2.3% in 9 minutes. I'm pretty sure we've had some that have been like literally a fucking few minutes, which is pretty crazy to think about. But yeah, this intraday strategy is the fucking one for it. Nice quick in and outs, all within one session. And when market's moving, yeah, you can get in and out, make a few percent in a few minutes. It's fucking lovely. Price is coming back down to our levels, so we'll see what happens with this. This one might go deeper because the EMA is quite low, so this one might be a 78.6er, like that. Yeah, but we'll see how it looks. See how it looks when it gets closer to time. Well, that kind of rules that trade out. I was literally marking up that position and just ready for it when it came down. But yeah, fucking hell. Quite a candlestick you got there. That's a huge boost of liquidity in there just to sweep that session range high out. And now you can see it just closing immediately and sell orders being pumped back in. So yeah, that kind of rules that move out in the space of like 1 minute. But yeah, now we go wait for the next one. Gives us a liquidity low there to look for the move to be from instead. We still have this session range here that it would want to take out, and then also this old one up here, if that's going to be the case. But there's money lying on those lines there. And again, the high is broken. I'm going to stop lining these up until we get a clear high form. It is taking out these session range highs as we keep going up here. The pound has finally switched and broke this high. Pound has been fucking awful today. I'm glad I didn't trade this. Euro's been clean. Very clean. Swept the low, came up taking the high, creating nice higher highs, higher lows. Got EMA support, fib levels being respected. Textbook stuff today. Easy money today on the euro. Wow, what a move. Smash that high in the space of 2 minutes. Straight from there to there. Core blimey, mate. Core fucking blimey. And now, we've been tagged in on a limit for a sell. That's lovely. Let me spread the message out on this one. So that's just tagged in for this limit order for a short on the euro. We've broke original structure, broke substructure, came up. Now we're retesting this balanced price range there, sweeping liquidity from these highs. We've got stops above that high up there, which is an order block. Looking to target this low down here for a 2.32%. So let's share that one out, let everyone know we've been tagged in. See what happens here then. That is a huge move up, which is nice because it means that there's inefficiency left behind. If that was a bit more laxy-daisy, back and forth price action, order flow has been fulfilled. But with a move like that, you know, all of these people that bought here and haven't taken their profits yet, they're going to need to close out at some point, and that's going to bring the market back down. And the market doesn't like to leave areas like that with order blocks and FEGs that have been left behind, because it just makes it unfulfilled. It makes it less liquid. The market is a lot more liquid when buyers and sellers are constantly being taken out back and forth. So a spike up into our limit is a perfect way to get tagged in. You're much more likely to see retracements back down after a huge impulsive move up like that. So that's really nice for us to see there. I wonder what's happening on the pound with this then. Yeah, I've not really had the same interaction. We need that to break a low first anyway before getting tagged in. With that being said, technically we are still looking for longs intraday. So let's bear that in mind. We've still got a lot of the London session left to trade. So just because we're short on the day trade time frame doesn't mean that we're now short intraday. Not at all. Like I mentioned, different time frames, different strategies. Hedge. So here we are still bullish. Wait to see that EMA come in. Wait to see where this retraces down to. See if we get any candlestick confirmations before. And we can look to keep trading this higher if it has to do that. But we'll see. See what happens. Joe, mate, just check the VIP chat, mate. I'm pretty sure you're in there. That's got all the info you need. So we're seeing a nice reaction instantly to our limit, which is lovely. We've closed the hour candle, rejecting that fair value gap down there. Almost, I guess we have tapped into that order block. It's a bit hard to see there because it was so precise, but it has tapped that order block, closed beneath the fair value gap. And now we have a huge 1 hour imbalance candle that we're looking for price to drop down and retrace. So we're in this EU short now, and that's a lovely 15-minute rejection candle that you'd want to see getting into a trade. So we have that, which is lovely. Intraday, longs are still valid. Completely different strategy, completely different time frame, so we're fine. So nothing really new since we had our win this morning. The pound seems to have rebalanced a bit and has came higher. Still not even taking out the Asian high yet though, so still massively lagging behind the Euro's move today, which we managed to profit from. We're now in a higher time frame Euro short. This is on the 1 hour. So we've been bullish intraday throughout the London session. You can see how powerful today's London session move on the Euro has been in this one singular 1 hour candle. But now on our day trading time frame, using our John Wick strategy, we've caught an entry inside the wick there yet again, and we're looking to short this lower. We are still got about another 40 minutes, I'd say, of our trading range here intraday. So if we do have, we've got a very difficult decision to make here. If this does come down into our zone and we see some candlestick rejections, technically we are valid for longs. We do want to actually go long here. That's triggering a buy for our intraday strategy. Even though it looks like this has a significant amount to recover, that's completely separate. These are two completely separate strategies. So if this one does print a buy signal, then I kind of have to take it. I can't just like choose to take some and not others. When all the criteria is met, that is. So we still have this liquidity up here that's yet to be swiped. Maybe we could see a secondary move come up to wipe out and fill that wick there, which would give us a longs London going into New York. So that is a difficult decision. I hope I don't have to make it if price just, didn't give us that rejection candlestick, or if that happens outside of our trading range. Right now it's just speculation, so you just got to sit and wait to see what is going to happen. So yeah, right now it's just a case of sitting and waiting, not trying to guess anything, just wait to see it and then react afterwards. Right guys, so we're nearing the last section of my trading range here time wise. I'm quite doubtful that we'll pull back to our zone, get a rejection candlestick, and then have an entry within that time. So I'm probably going to cut the live here. We got one trade this morning and we made 2.3%. That was really nice. That all played out within like 9 minutes. So nice 2.3% for us this morning. As prices massively shot up, we've actually tagged into one of our limit orders for a short here using our John Wick strategy. So we've analysed that this big bullish trend has broken out. We've seen some weakness in a further breakout. So what we're looking to do is trade this from a retracement, retesting a balanced price range. Got an order block there. We've got local highs there for extra liquidity. This is looking nice so far. Great impulsive move into our entry, which is nice because it's left behind a lot of imbalance that will want to be recovered. And we've also got a nice wick through the FVG from our entry. So this is a trade that we're holding at the moment. It'll be another 2.3% if that plays off. But obviously that's just a waiting game for now. I don't think we're going to have anything else intraday. So I'll take my alerts off of that. Take the analysis off, and then we'll just end it here. But yeah, very successful live today. 2.3% was made, got called out. If you check the chat, you can see everyone making money. CM says it's actually his best trading week of his entire life, no joke. So shout out CM. But yeah, thanks a lot for tuning in. Drop a like if you find these videos useful. They do provide me with a lot of one-to-one with everyone, all the members and stuff, so it allows me to answer your questions in real time. You get to understand my thought process and see real trading in action. Someone who actually is a full-time trader, not one of these guys that's just trying to make commissions from signing you up and is actually broke as fuck and trying to get out of their job and shit like that. So hopefully I bring a lot more realness than a lot of other people do. So if you do appreciate that and like what I do, drop a like so I can see it. And then obviously I'll clip all of this and build up my socials with it to try grow the team. But yeah, that's all from me today, folks. I'll post all my other trades in the VIP for the New York session. But we're going to cut the live here. So thanks a lot, guys. Take care.